Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is May 21st, 2019, and we're going to look at coffee today, in part because there was a big move to the upside, but we're still in a little bit of a consolidation period, and we're going to have to build a base here for this to really allow me to think that the trend to the upside is really going to start to pop up here. So for right now, we got the short, intermediate, and long-term trends all pointed to the downside. We have the technical rating, which is pointed to the downside. And because of this big move today, nothing is showing up yet as far as overbought, oversold type conditions and looking for legitimate base to the market. Now there are warning signs that are telling us that the market wants to base, but there's also a flip side to this as well. So this is more of a cautionary tale for coffee right now. If we look at the weekly deep dive alerts, the pro alerts, what you'll see is that coffee has had lows that were being set. These are weekly bars, and we had one that was a profit taking. Both these are profit taking alerts, and so it's giving us an indication that the trend that has been to the downside. I'll pull up the chart here. Here is the coffee daily bars point to the downside. If we look at weekly bars, these are weekly bars, you can see it's a lot more pronounced. Obviously there's been a downtrend in coffee for quite some time. This downtrend has been persisting for quite some time here, but you can see lower lows as far as the price action, but on the at least in this case the elastic level momentum indicator, we have higher lows, and so there's indications that the market is looking to put in some type of a base. You know, it's nice to see the downtrend and a reversal, or at least opposite direction, for that of the momentum type indicator on weekly bars. If we take a look at the daily bars here, you can see that this is the big day that we had today, but we're still in a consolidation. The nice thing is that we found support, as we typically do, with some of our signal level support and resistance level. So we did find support at that level, and the bias has been to the upside when it comes to the indicator, but the strength that we saw today was pronounced. It was much bigger than we probably would have anticipated, and so I'm a little wary of what is taking place specifically with coffee here, because the move was quite dramatic. If we come back and we take a look at the seasonal tendencies to the market, here's coffee right here, and this is one of our normal seasonal charts. This is a 10-year seasonal chart. You can see this little triangle, this black triangle, that's where we are now. And you can see that normally on a 10-year seasonal chart that we actually have a downward bias to the market, and then the trend begins. And that trend won't begin until the end of June, getting into early July. So this being, you know, late May, we still have a ways to go, at least from a seasonal perspective. So I'm a little cognizant of the fact that we have to be very careful with this bounce we saw today. I'd almost prefer to see a sideways consolidation occur. I'll come back here again to the market. We've obviously been in a sideways consolidation. That strength that we saw today, we'd almost like to see the market continue to go sideways for a period of time and really build out a base and then start to rally. If we happen to have a period where it rallies, comes back down, rallies, and comes back down, as long as we stay above this lower threshold, preferably this one right through here, I'll give you the two numbers, 87.73 for this level, and that's one that I've been talking about for a while, and this one's 89.22. They're both basically in the same area. What we want to do is see on a closing bar basis a continued point where we can stay above that particular level. That is going to be what's going to be very, very important to us. So from that perspective, we just want to be very careful with how things kind of play out. Now with the systems, we actually have a loss here. Don't always talk about losses, but yes, in reality, we do have losses with some of the systems occasionally. we actually have a hedge going on here where we're long and we're short the market. Obviously, we're trying to take advantage of the pop that we had today with the one long position, but the short, the daily bars still have a short the market. I showed that downward trend, and so the systems at least are reacting the way they should. Is the trend to the downside? Yes. Is it a trend-based system? Yes. Should we be short? Of course. But when we have intraday systems, we're looking for different forms of trends, and we're looking for other opportunities. At least we're hedging ourselves. Obviously, it's a hedge with a loss right now, but it's still a setup for a good trade. Once we break above this consolidation that we're in, and hopefully continue to build out this base. So I'll point out that even though coffee net is got a loss here, we've got 21 markets that we track. 18 of them are profitable. Only 3 have losses. Coffee is obviously one. Heating oil and S&P are the other 2. So 3 systems, or 3 markets, I say, are have losses, and 18 have profits. So I can't really complain for a small little loss like we have right here. But it is setting up for a condition where this consolidation will eventually trigger, hopefully, a little bit of an upside bias, and that trend to the downside, that daily bar trend system, will liquidate itself, and we'll be able to add to some more long positions. But just keep in mind that the seasonal tendencies still are a little more negative. So I think our best bet right now is just a sideways consolidation. Let's see how things kind of react with, in this case, this yellow line represents the 50-day moving average. Just recent history has shown that we've come up and we're rebuffed by it a couple of different instances. We did have a closing above it, but it quickly reversed, another close, and then it was down, down, down. So what we need to see is maybe a close and a staying above that particular moving average, and then look for that market again to base out. I would prefer to be looking at coffee in late June rather than late May. But let's see how things kind of turn out here, and we will take a look at another market tomorrow. So thanks very much. Bye-bye.